Let's face it. The idea of starting to invest with no experience can feel like trying to perform surgery without a medical degree. It seems risky, complex, and let's be honest, totally overwhelming. You might be thinking, I can't afford to lose money. Or, I have no idea where to even begin. But guess what? You're not alone. Everyone, from billionaires to beginners, started exactly where you are at zero. Here's the good news. You don't need to be an expert to start investing. You don't need to have tons of money, and you definitely don't need to spend hours glued to financial news trying to make sense of stock market jargon. In this video, we're going to break it down in a simple, step-by-step guide so you can start investing with confidence even if you have no experience and just a few bucks to your name. And yes, we'll keep it fun and realistic. No complex graphs, no suits and ties, just a straightforward path to getting started. Sound good? All right, let's go. Don't forget to subscribe to our channel. Let's get started. Why bother investing at all? So, why should you even care about investing? Can't you just stash your money under your mattress or keep it in your savings account? Well, here's the thing about keeping your cash in a regular old savings account. It's like leaving a pizza out overnight. Sure, it's still technically pizza, but it's not going to be the same when you go back for it later. Inflation, a fancy word for prices going up over time, will eat away at the value of your money. Your cash is losing purchasing power year by year. So, unless you want to spend your retirement trying to live off a pizza crust of savings, you need to invest. Investing gives your money a chance to grow. It's the secret sauce behind why some people can retire early or afford a nice home while others, well, don't. The cool part? You don't need a ton of money to get started. Just a little bit of effort, and the right strategy can go a long way. Step 1. Get your financial house in order. All right, before we talk about how to start investing, let's get one thing straight. It's important to have your financial foundation in place first. I'm talking about paying off high-interest debt, like credit cards, building an emergency fund, and understanding your budget. Let's keep it real. Investing won't fix all your financial problems. If you're drowning in credit card debt or don't have savings, investing too soon is like trying to build a skyscraper on a swamp. Get the basics down first. Start with an emergency fund that can cover at least 3-6 months of expenses. That way, if something unexpected happens, like your car suddenly deciding to become a paperweight, you won't have to sell your investments in a panic. Once you've got those financial ducks in a row, it's time to take the next step. Step 2. Start small. You don't need millions. A lot of people think you need a big pile of cash to start investing. But here's a fun fact. You can start with as little as $1. Yes, you heard that right. Thanks to apps like Robinhood, Acorns, and Stash, investing has never been easier or cheaper. These platforms allow you to invest in fractional shares, meaning you can buy a small piece of a stock instead of the whole thing. Want to own a piece of Amazon? You don't need $3,000, you can invest $10 and still get in on the action. The key here is consistency. Start small, but start. Set up automatic investments, so you're regularly putting in a little bit of money, whether that's weekly or monthly. Think of it like a gym membership for your finances. You can't expect six-pack abs after one workout, and you can't expect to become a millionaire after one investment. But over time, that consistent effort will pay off. And hey, if gym memberships can help get rid of a pizza belly, regular investing can help build up a financial cushion. Step 3. Know where to invest. Don't just wing it. Okay, I've got a few bucks, where do I put it? You have company. This is where most novices panic. Some stop in confusion, while others take risks hoping to win big. Investing doesn't have to be scary or guesswork. Index funds are good for beginners. Think of it like a buffet where you can sample everything instead of choosing one. Similar to index funds, you invest in many firms. An index fund that tracks the S&P 500 lets you invest in the top 500 US firms. This automatically diversifies your portfolio, reducing risk. Index funds are simple, cheap, and good for long-term gain. ETFs are another beginner-friendly choice. These are basically index funds but traded like equities. ETFs are like pre-mixed smoothies. Someone else has chosen your investments. Just drink and unwind. ETFs combines diversification with the ability to trade them anytime. Finally, robo-advisors can help if you're still confused or overwhelmed. Your investments can be managed by robots. Betterment and Wealthfront build and manage portfolios based on financial goals and risk tolerance. They handle mundane tasks like balancing and changing your investments. Simply set it up and let the robo-advisor manage the rest. Step 4. Focus on long-term, not quick wins. Let's be real for a second. Trying to get rich quick by trading stocks is usually a bad idea. It's like trying to win the lottery. Sure, some people get lucky, but for most of us, it's just not going to happen. The key to successful investing is thinking long-term. When you invest in solid companies, index funds, or ETFs, you're betting on the economy to grow over time. And historically, the stock market has always gone up over the long run. Sure, there will be dips, corrections, and maybe even crashes along the way, but the trend is upward. A good rule of thumb is to invest for at least 5 to 10 years. This gives your money enough time to ride out the ups and downs of the market. Don't panic when the market drops, because that's normal. Imagine selling your house just because the price dropped 1 month. Nobody does that. Treat your investments the same way. Patience pays off. Step 5. Automate your investments. You know how people say, pay yourself first? That's what you should be doing when it comes to investing. One of the best tricks in the investing game is to automate your contributions. Most investment platforms allow you to set up automatic transfers from your bank account. Whether it's $20 a week or $200 a month, set it and forget it. This way, you don't have to think about investing. It happens in the background while you go about your life. And here's the magic. It forces you to invest even when you don't feel like it. You're taking advantage of dollar cost averaging, which is just a fancy way of saying you're buying investments at different times, some when the market is up and some when it's down. Over time, this tends to balance out and work in your favor. Plus, automating your investments means you're less likely to panic when the market drops because you're not micromanaging your portfolio. You're in it for the long haul, remember? Step 6. Keep learning, but don't get overwhelmed. Investing isn't a set it and forget it kind of thing forever. While automating your contributions is great, it's still a good idea to keep learning about the stock market and other investment opportunities. But, and this is key, don't get overwhelmed by all the noise. You don't need to know every single financial term or watch the stock market daily to be a successful investor. Set aside some time each month to read up on investment basics, follow trusted financial blogs, or watch educational YouTube videos. The more you understand, the more confident you'll become. But keep it simple, there's no need to dive into complicated financial theories right away. Remember, Warren Buffett, one of the greatest investors of all time, keeps his investments simple. If it works for him, it can work for you. And hey, if you've made it this far into the video, you're already on the right path. You're investing in your financial education, and that's a huge first step. Before you go, if you found this video helpful, don't forget to hit that subscribe button so you won't miss out on more tips and tricks to grow your money and improve your financial future. Thanks for watching, and get ready to start building your wealth one step at a time.